Ladies and gentlemen, good day and welcome to the TATA ELXSI Limited Q1 FY-23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shashank Ganesh from EY. Thank you, and over to you, sir.
Thank you very much, Stephen. Good afternoon to all the participants on the call. Good morning if you're logging in from the western side. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. Therefore, it must be viewed in conjunction with the business risk that could cause further result performance or achievements that differ significantly from what is expressed or implied by such forward-looking statements. To take us through the results and answer your questions today, we have the senior management of TATA ELXSI, represented by Mr. Manoj Raghavan, Managing Director and CEO, Mr. Nitin Pai, Chief Marketing and Chief Strategy Officer, Mr. Gaurav Bajaj, Chief Financial Officer, and Ms. Kaveri Sriram, Company Secretary. We will start the call with a brief overview of the past quarter by Mr. Raghavan, followed by a Q&A session. We would appreciate your cooperation and restricting yourself to 2 questions to allow participants an opportunity to interact. If you have any further questions, you may join the queue and we will be happy to respond to them if time permits. Having said that, I would like to hand over the call to Mr. Manoj Raghavan. Over to you, Manoj.
Thank you, Shashank. Good afternoon to everybody, and thank you for joining us today, and hope you and everyone in your family is safe and healthy. I'm happy to report that we had a robust first quarter performance. Our growth momentum from last financial year continues, and our top line and bottom line growth stays strong. Our revenues for operations for the first quarter was rupees 725.9 crores, growing 6.5% quarter on quarter and 30% over the same quarter of the previous year. This growth was predominantly volume-led. Our EBITDA margin for the period was 238.2 crores, growing 7.6% quarter on quarter and 58.8% year on year. There was a 36 basis point expansion of EBITDA margin over the previous quarter. Our profit after tax for the quarter was rupees 184.7 crores, showing a robust growth of 15.4% quarter on quarter and a 62.9% year on year. Both of our key divisions, EPD and IDV, performed very well. The EPD, our largest division, grew by 6.2% quarter on quarter, and our industrial design and visualization business too witnessed a strong growth of 6.6% quarter on quarter, fueled by design-led deals and AR/VR deals. The robust performance of our EPD division was contributed by all the industry verticals. Our media and communication business reported a steady performance of 4.9% quarter on quarter and 29% year on year growth. Our transportation business unit reported another strong quarter with 6.3% quarter on quarter and 41.8% year on year growth. Our healthcare business continues with its stellar performance and has grown by 10% quarter on quarter and 53.6% year on year. This business is now almost 100 crores per quarter business, contrasting with just over 36 crores 8 quarters before, almost a 3x growth in 2 years. So we're very happy with the growth of the healthcare business. In terms of our performance by region, our US geography contributed 42.8% of our revenue during the quarter, recorded a strong quarter-on-quarter growth of 10.6% and a year-on-year growth of 27.4%. Europe grew by 3% quarter-on-quarter and 28.1% year-on-year. India reported a robust performance of 16.5% growth quarter-on-quarter and 68.8% year-on-year. We are focusing on deeper customer engagements and mining, both for our top 10 accounts and carefully curated portfolio of strategic accounts beyond the top 10. This is actually helping us with both wallet and market share growth. On the employee front, I'm happy to share that the TATA ELXSI family is now over 10,000 people strong. Our net addition during the quarter was 771, which is more than double the net addition of Q4 FY-22. This has been supported by our concerted efforts on employee engagement, reinforcing our employee brand proposition to attract the right talent from outside. Our attrition rate has dipped marginally to 19% as compared to the previous quarter. To expand further our engagement with future design thinkers and to encourage young innovators to think out of the box to bring sustainable solutions to the market, we have launched Ignite, a global design and innovation contest for sustainable design, coinciding with the World Industrial Design Day on 29th June. So overall, it has been a pretty good quarter with consistent growth across our key divisions, key geographies, and industry verticals. We continue to focus on growing our talent pool with both hiring and retention while maintaining and building on healthy margins. We are entering the second quarter with a strong order book and a healthy deal pipeline across our key markets and industries. With that, I hand it over for the QA session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhavik Mehta from JP Morgan. Please go ahead.
Thank you, and congratulations on a great set of results once again. So I had a couple of questions. Firstly, to Manoj and Nitin, if you can just talk about what are you hearing from clients on their R&D budget for this year as well as next year, given the macro concerns everybody is talking about. And if you can also give a flavor across your 3 verticals on this topic. Secondly, how are you looking at the supply situation given that attrition still remains at elevated levels? And is there a plan to do another wage hike in FY23, or should we assume that the wage hike for this year is done and the next cycle will be in FY24? And one question for Gaurav is if you can just provide the puts and takes on the margins for this quarter.
So I think regarding your first question regarding what we are hearing from the market and from customers, I think yes, we all are aware of the macroeconomic situations, the war, and so on and so forth, right? Inflation in the US and so on. But I think so far we have, we are a very niche engineering service provider, working on the ER&D business. From all our major customers, we really have not heard any intent to reduce budgets or and also if you look at our deal inflow and the deal pipeline as well as the sort of order book that we have and so on, I think quarter on quarter it has only improved. Yes, there is the macroeconomic situation. We are aware of it. We are watching it very carefully. But we have nothing to report from either our key customers or what we hear from the market, right? But that could change maybe a couple of quarters from now. But as of now, I think it is business as usual, and our order book, the deal inflow, etc., continues to be pretty strong. Your second question was about wage hikes and supply situation and so on. I think we'll take it as it comes, right? We have done our wage hike, a substantial wage hike in January for most of the junior level, and we have done one in April for all the senior folks. We will wait and watch. The attrition is still high, but I think we have come off the peak of the attrition. It is coming down. Supply is still a challenge. Challenge in the sense that we really need to put in a lot of effort to bring in the resources, and my HR and recruitment team has done an excellent job in the last quarter, and the results are there to see. So I think the situation is improving. We'll wait and watch. Whether we do a wage hike again at this point in time, it's difficult to tell. So maybe a couple of quarters from now, we will relook at the situation and then take a call.
Yeah.
I think your third question was on the margin, performance for the quarter. I think we are very satisfied with the margin that we able to deliver in this quarter. And as I, mentioned in our last earning call also, that I think we feel very confident and not as such worried about the margin situation. Of course, there are inflationary pressures and we did the wage hikes, but at the same time, we have other levers, which help us to mitigate or set off some of those wage hikes, impact on our margins, be it operating lever, price hike we able to secure from the customer. And also the SG&A, optimization of SG&A with the scale also help us in terms of, sustaining our margin as we did in the last quarter. Plus, this quarter we also moved some of our operation into the SEZ, which boosted our profit after tax.
Okay, that's very helpful. That's it from my side.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to one per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Vimal Goel from Alchemy Capital. Please go ahead.
Yeah, thank you for the opportunity and many congratulations on robust performance. So my question was on the hiring target that you have for FY23. If you could highlight what kind of numbers are we looking at for the full year of FY23, and what is the fresher intake possible in this year?
In FY23 we are looking at hiring about 3,000 to 3,500 fresh intake, and laterals will be, of course, as per business needs and so on, and we could add about 1,000 or 1,500 of laterals.
Just to clarify, the 1,000 to 1,500 will be included in this 3 to 3,500, or is it separate?
No. It is on top of that. The freshers is
okay.
That we hire from universities is about 3 to 3,500.
Got it, sir. Got it. Sir, just wanted to get a sense on margins. If you could just maybe highlight what the 32 bips of expansion that you've seen in your EBIT this time. If you could just break up between what was the impact of the wage hike and how much did your cross currency impact, because if you have a pretty significant exposure to euro and GBP. If you could just highlight what was the headwind because of these two issues, and how did you offset that?
Okay, hi, this is Gaurav. So I will take your second question first on the the currency headwinds and all. If you see our results, both actual and the constant currency has delivered the same 6.5. Of course, there were headwinds and tailwinds when we compare USD, Euro, and GBP. I mean, one appreciating, other depreciating, but the way our mix of the portfolio is, we able to meet the constant, both actual and the constant deliver at the same growth rate. So as such, there is nothing from those getting into the bottom line. On your margin, I think as I already alluded on the previous questions, basically the expansion of the margin is because of the the scale which optimize SG&A expenses that we have, and then other operating lever in terms of the utilization, able to get a better utilization this quarter compared to the last quarter, and also able to secure certain price hikes. While we won't be able to break down the impact, but yeah, 30 basis point can be concluded towards the operating lever and utilizations pyramid, and some of the hikes that we able to secure from the customers.
Fair enough. Sir, lastly, what your forecast or your outlook on the comms vertical? Autos, we all know that it's in a structural uptrend. If you can just maybe highlight what is your outlook on the communications vertical, and plus you have also highlighted that healthcare will probably move towards that 20% number, which is and the progress there has been quite good, I must say. So if you could just highlight your outlook over there, given the macro situation we are in. Any headwinds that you're seeing in communication? Because now at this point in time it's the largest vertical, even larger than auto. So yeah, your outlook over there will help.
Yeah, so I think all the three verticals have been growing pretty satisfactorily over the last 7 to 8 quarters, right, or 8 to 9 quarters. Healthcare, as I said, is the fastest growing vertical, and it's been growing pretty well. This quarter we grew 10%. But having said that, and we have also talked about how, over a period of, over a period of 3 years, how the industry vertical mix would be, right? 40, 40, and 20. 40% media and communication, 40% auto, and 20% the healthcare and medical, business. And if you see over the last many quarters, we have been trending towards this particular ratio. I mean, it's still the medical is about 15% or so, but I guess in another 2 years time frame, we would hopefully reach that 20% guidance that we have been giving, right? So the media and communication vertical definitely is over the last 6 quarters have shown very good growth rate, consistent growth rate rather I would say. This quarter also we've had a pretty good growth rate. All our key customers, we continue to be very significant and very relevant to those customers. There is of course new opportunity with 5G coming in, with a lot of investments that we're doing on the ad tech space and the OTT space and so on, right? So I continue to remain bullish. Growth rates would of course on quarter to quarter that would be plus or minus 2-3%. I don't think we need to make too much about it. But you look at the long-term growth path and see how it is consistent. So I think all our businesses, we are on a pretty steady wicket, and I continue to be pretty bullish on the growth prospects of these 3 verticals.
Sorry, sir. Thank you so much and all the best.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi, congratulations, Mr. Raghavan and Nitin, on excellent performance and continuous, performance over last 16 quarters. So, Raghavan, if we have to look into other players like who are also in engineering R&D, their growth is pretty much low than what we are doing, and their margin is also. So, what exactly we are doing differently from them? So that is, giving this kind of a confidence that we are talking.
Thank you, Mr. Bharat Sheth. You're asking me to disclose something very confidential, and how do I do that?
No, sir. If you can give some color or broader out. Points.
Whatever color I give, I'll not be able to answer that question, right? It doesn't make sense to answer that question in a public forum like this, right? Yes, we have our strength, we have our capabilities, we are focused. We have a very strong, execution, methodology. Where we plan for the long term and we execute our strategies very, very carefully, and we stay consistent, right?
Correct.
That's the key for our, execution.
Yeah, Mr. Sheth, maybe I can just add a little.
Yeah, I'll be grateful.
Yeah, now I would only suggest that one should look at it as a combination of factors and levers, right? Because it is never one single thing that contributes to success. It's really the combination of these. So therefore, if you look at how we have driven the focus on 3 key verticals, rather than saying do only one because then you're subject to huge market risk versus many where you're then subject to a lack of attention and focus. So we have picked a set of verticals. We believe that there is enough growth and space in these verticals to grow, and we are investing in them deeply. 2, we are also looking at the maturity of a delivery process, right, which is again very differentiated. And that maturity results in the ability to drive offshore, because it is not offshore just because you want it offshore. It's sometimes also offshore because the customers trust you to be able to deliver. So if you look at that offshore on-site ratio, if you look at how we are driving fixed bid concentration, again, not too much. The idea is not to become 100% fixed bid or 100% time material. I think it's the combination of these 4 or 5 elements that you'll find reflecting in 1, growth, and 2, margins.
Okay. And Nitin, taking forward this, how much this new designing will add as a capability to be more, right from the inception stage, concept level stage with the customer to deliver?
Yes, so Mr. Seth, I would encourage that this should also be treated as one more element of what drives that overall growth and margins, because design by itself will not drive all the growth.
Correct.
We look at it as one more lever where you're able to say, why is TATA ELXSI different from the others? Because we're able to look at the customer experience part of the objective of the customer. We're also able to look at what products need from a perspective of human-centric design that will make it more desirable or more successful. So in that sense, it gives us a differentiation when we stand there in front of the customer along with the same set of other ER&D companies that you're referring to. The second is, it also allows us to add a little more value to the success of the customer. Success of the customer is not just in schedule, quality, time, and that project that we did well. It's really in the success of the product when it goes to market. So I think it's just those little things that add, if I may say, that the masala that makes it more tasty.
Okay.
For lack of a better comparison.
Well, and last question on this quarter particular, our India business has grown substantially. So how do we look at India business quarter on quarter, which has gone? So do we see this sustainability of India business, also becoming a larger pie?
India business is a combination of factors, right? Of course, if you look at it, our SI business has grown.
Correct.
And that growth comes entirely from India.
Okay.
So that has also contributed to the overall, India business growth. Of course, we work with a lot of the captive, MNC customers here, and that business has also been growing pretty well for us.
Thank you, and all the best, both of you.
Thank you.
Thank you. Thank you so much.
Before we take the next question, a reminder to the participants. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
First, congratulations on our market cap now 50,000 crore, which show Manoj and your team how you are dedicated for working of the company. Sir, my next point, the tax rate is in this quarter is 19% versus 27% in March. So what is the reason behind that?
Hi, this is Ravi. This is Gaurav.
Yeah.
I think I answered part of it in my, to your first question. We said that we expanded our capacity in Trivandrum, where we have moved into the SEZ, office premises, which has helped to, bring our tax rates down. And also last quarter, there was, one-time tax impact that we have took. So to that extent also, there is a, when you are comparing from the last quarter to this quarter, you will see a bigger contrast. But having said that, I think with the SEZ expansion and that helping us into our overall effective tax rate to bring it down, I think we believe that this year we will be, lower on our effective tax rate.
Means this year we may have tax rate around 19 to 20%, right?
We won't be able to, project that, but yes, it will be lower compared to the last year.
Thank you. Thank you very much.
Thank you.
Thank you. The next question is from the line of Arun Maruti, an individual investor. Please go ahead.
Yeah. Am I audible, sir?
So if you can take the phone off speaker, please.
Hello?
Yes.
Am I audible, sir?
So please proceed with your question.
Yeah. Thank you to the manager for giving me this opportunity, and congratulations for the stellar performance. Sir, only have one single question that despite revenue growth, our other expenses are. Yes, hello?
We are unable to hear you. Your audio is too muffled. If you can take the phone on handset mode, please.
Just a minute. Hold on. Yeah, am I audible now?
Yes, sir. Please proceed.
Yeah, congratulations to the management for the stellar performance. So only I have a single question that despite revenue growth, our other expenses are same as of last quarter. So would like to understand the delta behind that, whether there was something one-off in last quarter or something else.
In other income?
No, you said other expenses.
Yes, sir.
Yeah, so other expenses, it's not directly proportionate to our revenue scales. Those are some of the other discretionary expenses that we have at the company level. So there we don't see any major, variation in any of the cost line items. So hence, if you see, those are not very different from the last quarter.
Okay. So
build our capacity and capability ahead of our, or of our operations. Knowing that growth rate that we are, achieving and delivering quarter on quarter. So to that extent, there is no incremental there.
Okay. Thanks a lot, sir.
Thank you.
Thank you. The next question is from the line of Tushar Bohra from MK Ventures. Please go ahead.
Yeah, thanks for the opportunity and congratulations to the management for an excellent set of numbers. Sir, I would like to understand the management's focus and efforts being taken to increase beyond our top 3 domains today. In the past, you've referred briefly to, maybe aerospace, maybe off-road, railways and other verticals. If you can just help us understand what is the work that we're doing in these areas?
So I think what we have told earlier is that apart from the 3 main verticals, we have adjacencies to these 3 verticals, right? So from a automotive or transportation industry perspective, it is off-road, it is rail, is the commercial vehicle side and so on. I think that's going pretty well, and we have, even in the last quarter, we have won deals in the adjacency, especially on off-road vehicles and the commercial space. So that's something that we continue to invest in. From media and communication verticals, the adjacency, we look at the new media and the entire digital space as an adjacency, and there we have been doing pretty well. A lot of projects that we have been doing on the OTT side and so on, are part of this adjacency. From a medical and healthcare side, yes, again on the digital side as well as on the pharma side, we have been investing in, and that also we have launched TE Engage, that's our digital health platform, and that's part of this overall strategy for the adjacency. I think we've shown that in multiple trade shows around the world. Good traction building, and I think we are pretty satisfied with the adjacency framework that we have built, and we believe over the next 3 to 5 years we will see decent growth from these adjacencies, which essentially is to de-risk the main industry verticals that we are in, just in case those industry verticals go through any macroeconomic situation and so on. So I think from that perspective, we are pretty well covered, and I think I'm pretty satisfied with the growth that we see on all these 3 adjacencies.
And
of
sir,
course, we are also looking at a few other areas that we are investing in, whether it's on the industry 4.0 side, manufacturing side, and the entire augmented reality and virtual reality side and so on. So there are a lot of other things that we are investing in, building capabilities, building POCs, doing trial projects with customers and so on. So we will, as of now, it is still a pretty small, revenue numbers from those new areas. But as and when anything significant, we will get back to you.
Sir, just related to this, also wanted to understand, we had this engagement with Panasonic a few years back on consumer electronics. So if we build up on that further globally, if you're working with other players, or any thoughts around that? And if I may quickly slip in a second question, how is that innovation, thought process working out? Meaning IP-based revenues or any clarity around that, or any outlook for the future?
Yeah, so Panasonic continues to be a key customer for us. We have set up a offshore dedicated center for them in our Bangalore facility, and it's now more than 5 years. We have completed 5 years of engagement with Panasonic, and I think we have seen good business growth as well as good projects that we have done. We have built a lot of capabilities in the consumer appliances space. We apart from Panasonic, there are a few other customers that we work in the consumer appliances space. From an innovations perspective, IP perspective, yes, we have built, our own, products, our own frameworks, which we license to customers and, get royalties and so on. So that is also, that continues to be a focus. We continue to invest in, new products, building new products and so on. But again, from a revenue perspective, it is still not very significant to report. It's less than 5%. But we believe, once we have good traction in this, that's another good opportunity for us to, build up a good revenue base without really, hiring a lot more resources and so on, right? So non-linear piece is what we are driving at, but it's too early at this stage.
Got it, sir. Thank you so much for the opportunity.
Thank you. The next question is from the line of Hiren Ved from Alchemy Capital. Please go ahead.
Yeah, hi Manoj, Nitin, Gaurav. I don't have any questions, but just wanted to congratulate on fantastic set of numbers and great execution as usual. All the best.
Thank you, Hiren. Yeah.
Thank you.
Thank you so much.
The next question is from the line of Apurva Prasad from HDFC Securities. Please go ahead.
Thanks for taking my question and congratulations on the numbers. Manoj, can you share some progress on the adjacencies across the different verticals? You touched upon some of that, but if you could just expand further. That is the first question. And the other one, Gaurav, is on margins. How should we look at it? You think the current margins are sustainable, and what are the different puts and takes in the more near term that you see on this?
Yeah, hi Apurva, this is Nitin here. Maybe I'll take the first one. When we called out adjacencies, and we called it out both as an opportunity to grow the addressable market as well as to de-risk the cyclicity, if any, in the industries that we currently operate in. And to that extent, what we have also looked at as a long-term goal is a 80-20 ratio, right? And again, we like to set some numbers, and the idea is that they create lighthouse directions for us. And it's not a matter of whether we get there precisely, it's a matter of trending there. I think that is what we're doing very well on. And for example, if you look at media and communications, our progress on new media far exceeds the milestones that we had set, right? So which means that we are doing far, far better than what we had set out as milestones on that journey of 80-20. If you look at the transportation business, we had added off-road as well as rail. And we looked at two markers there, right? So one marker is about whether you're adding marquee customers. You just need to get those logos in first, irrespective of the revenue or dollar numbers against them. The second is absolute revenues. I think we're doing well there, just about on target. While you look at healthcare, of course, you have to give them credit because they've been so busy growing their primary business that sometimes there is no breathing space for anything called adjacency. But I would give them great credit that they have done a lot of efforts in terms of building out the service portfolio for pharma and digital health, right? And I think the launch of TEngage, which was done in March of this year, I think is a very, very big milestone for us in that journey. Why? Because for that BU, part of the journey will be product and platform driven, part of it will be services. So again, I think we are making sure that they have the right milestones and markers for knowing that we'll make progress. So to that extent, I think we're still far from starting to declare what the adjacency numbers are and so on. It's not required because you see that it is an integral part of our growth. But we can assure you that we are on track.
Hey, Apurva. Hi, this is Gaurav. So Apurva, on your second question on the margin outlook and all, I think we tried to answer on some of the other questions. While we don't give an outlook or the projections, but I think what we can say that, at least in the short term, to the extent that we have a visibility and given all the macroeconomic, environment and situations, I think we continue to believe and being confident with our tight execution and disciplinary, focus objectives. We should not be something which is not something, worry us too much. We will continue to be in the range above. Of course, we have to see certain inflationary pressure. though wage hikes are already behind us, but we have to see whether we have to do something more or not. I think that is something very difficult to say at this point of time. But I think the other good factor is that given our target operating model, which is more offshore centric and end-to-end governance, I think that gives us a little bit more flexibility and lever in terms of tightening some of those things and set off some of those inflationary pressure. I think we can have those levers available to us wherever we can have the expansion, do more offshoring. And also, I think other things, other than the operating levers, we also, able to expand into the SEZ, which also help us to, build at least on our profit after tax, giving the superior profitability. And that will continue because with that expansion, our effective tax rate is going to come down this year. So that will also, add to the bottom line, when it comes to the EPS and the profit after tax.
Got that. Just to, on the last point, Gaurav, what is the one-time in the ETR for the quarter and what should be a normalized ETR go forward basis? And on the margin point,
would not be able to put up a number, but we feel that at least 2 to 3% we can drop our effective tax rate.
Versus FY-22 ETR.
Yeah. Yes.
Okay. And just on that margin point, so based on your medium-term outlook of the delivery mix, do you think this 32% plus is a more sustainable, normalized level, or do you envisage additional increments and scope to bring this the margin structure down?
No, I mean, as I said that it is going to be the range about. We don't feel that there will be a significant change or the variation from the current level. Of course, there could be certain expansion, certain discretionary expense that may come back, but there are a lot of currently there are a lot of macroeconomic things that has to be taken into account. So from short to medium terms, I think it should be okay. I think we were comfortable there.
Got it. Thanks, Nitin, for the detailed answer. Thanks, Gaurav and Manoj. All the best.
Thank you. The next question is from the line of Rohit Ingole from First Global Securities. Please go ahead.
Hello.
Yes, sir. Please proceed with your question.
Can you hear me?
Yes, we can.
Yeah. So first of all, congratulations all the team of Tata ELXSI. Sir, I have only one question about the EBITDA margin. So what were the reason of highest EBITDA margin we are reported?
Hi, I think we have already answered a few times. We mentioned that the scale, the optimized SG&A with the economics of scale and the top line growth and other operating levers along with some of the rate hikes that we able to secure from the customer, able to expand our EBITDA margin by 30 basis points.
Okay, sir. Thank you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Chirag Kacharia from Ashika Institutional Equities. Please go ahead.
Congratulations on good set of numbers, sir. I would like to know your broader outlook on American market and European continent specifically.
Yeah. So I think So as I talked earlier, right? From broadly both U.S. and the issues are different in both the markets, right? U.S. right now is it's a high inflation scenario. People talk that there is going to be a recession, but then if you look at it, everybody has a job. The job market is very, very hot, and at the same time, people say recession is happening. So there's a little bit of a contradiction there. Similarly, in Europe, the issue is more about the war and the macroeconomic situation out there, right? But having said that, again, we are still small to a medium-sized organization. From our perspective and the revenues that we deliver, right? I believe these factors really don't play too much of a role for us. Our customers, we've not heard anything from our customers that they're going to reduce the spend or they are stopping some projects or any of that. So to that extent, both US and customers in Europe, we hope that we'll continue to do well in these markets. Of course, in US you have the dollar becoming stronger and stronger, and on the other hand, in Europe you have both pound and euro becoming weaker, right? So that, of course, that will affect the net realization in INR in both these regions. But other than that, I think we continue to execute. We continue to keep close to our customers. We continue to deliver value to our customers. And I believe unless something drastic happens, definitely not in the short term. We don't see any short-term issues. But mid-term to long-term, again, there are a lot of factors, including how this war will continue and the effect of that on the overall global economy and so on. But whatever happens, it won't be that it's something very specific only to Tata ELXSI. We will still, I believe, will be better off than a lot of our competition or other players in the IT industry, right? So whatever affects them will affect us also.
Okay, sir. I have one more question, if you allow me. Can I ask, or shall I come in later?
Go ahead, please.
Yeah. Sir, I have a question in terms of the constant currency calculation, because the normal growth and constant currency both in similar range. So if you share some highlight on the mechanics of this calculation.
I think Manoj also touched based upon that USD appreciated and became strengthening day on day. On the other hand, if you see pound and GBP and some of the other currencies, those have been depreciating. Given the mix of the portfolio and the revenue we recognize this year, I think both kind of played off to each other, and hence actual and the constants are coming similar.
Okay, sir. Fair enough. Thank you so much, and best of luck.
Thank you. The next question is from the line of Dipesh Mehta from Emkay Global. Please go ahead.
Thanks for the opportunity. A couple of questions. So just want to get clarity about salary hike. Salary hike we gave effect from April, and it is fully given, or certain set of employee only hike was given?
So I think we gave first salary hike for all the juniors, almost 60-70% of the staff from January in the beginning of the year, and the remaining set of staff was given a salary hike in April. So it is fully done.
Okay. And if I look, let's say this quarter, your employee expenses grew less than your headcount growth. So in a way, it is not getting captured in terms of inflation. So can you help us understand what explains that part?
No, I think if you see the personal cost, it is inclusive of both the wage hike that has been done for the for the middle and the senior management this time, and also includes the incremental headcount that has been added during the quarter.
That is right. Your headcount growth, let's say quarter on quarter, was 8%. Your employee expenses or wage bill grew 6%. Now, when you say you gave salary hike to almost half of the employees, it is not getting reflected. That is where I try to get some clarity.
Yeah, maybe I can just clarify. It is because the added employees don't necessarily come in the beginning of the quarter, so they don't count for the full quarter. We had them throughout the quarter.
No, even if you take average, let's say 8% end to end, if I take 4% is average, still it is hardly any gap between.
Cannot average out that. Yeah, and then it has to be seen the pyramid, the mix of the people, the regional mix. There are a lot of factors which goes into there, and the personal cost also includes other, the contribution to the funds and the staff welfare and all other expenses. So that straight math will not work like that.
Understand. Second question I have is about the offshore shift, which let's say we are seeing very steady improvement over last few quarters. Do you think, considering things are opening up, that trend will now stabilize or may have some reversal, or you think this trend likely to continue?
No, what was the offshore
shift?
That was steady. So do you see that continuing at that level, or do you see that?
Yeah, I think over the last few quarters it has been pretty steady. Yeah, I think there's a slight uptick in the on-site revenues this quarter, but not a significant uptick. So I think I would tend to continue that, customers are reaping benefits from the offshore execution that we provide for these customers, right? So I don't think they will be in a hurry to move on-site.
Okay. So you expect this 75-25 is broadly stable, likely to happen even on medium-term basis?
More or less. That could be a +1%, +2% here and there.
Yeah, that's fine, but broadly 75-25.
Yeah.
I understand. And last question is about the adjacency which you... Sorry.
So sorry to interrupt, but for any follow-up question, maybe request
Sure,
to
thanks.
you, please. Thank you. The next question is from the line of Dev from Invest Yadna. Please go ahead.
Hello, am I audible?
Yes, sir. Please proceed.
Thank you for giving me opportunity to ask the question. My first question was on pricing. So you said that you had some price increase. So can you elaborate on that? Which were the hot skills which were suitable so that you could get price hike from your customer, and across which verticals was this phenomenon observed?
I won't say it is based on skills and so on. Of course, there are certain skills that traditionally also command a premium and so on. But the price hike that we are talking of is customer engagements, right? Depending on how long we have been engaged and what value that we deliver to these customers over the COVID years and so on, right? So we have been able to go back and negotiate price hikes with individual customers. Based on the value that we bring to the table.
Okay, thank you. And I have one more question. So it was respect to automotive vertical. So your traditional versus OEM. So what is your contribution to the new age OEMs versus the traditional OEMs in the automotive vertical?
We continue to work with the new age OEMs as well as the traditional OEMs. The new age OEMs are primarily around the electric vehicles, the connected car platforms, the digital twins, and all the new areas, right? Whereas the traditional OEMs is a mix of the traditional businesses of infotainment, body chassis, powertrain, cockpit, and so on. Plus, of course, the electrification scope and so on. At this point in time, we're not in a position to tell you how much percentage or what we don't have the data.
Okay. Thank you.
Thank you. The next question is from the line of Jay Raman Krishnamurthy, an individual investor. Please go ahead.
Hello, good evening.
Good evening.
I have a question basically on the healthcare revenue. It's expanding more than what we projected maybe. Is this due to any tailwind, or there is a concentrated effort to expand the revenue? Because what I know is we look at 20% of the revenue to be healthcare. The way we are growing is a possibility that we will exceed this 20%. The second question is with regards to the revenue. How much percentage of the new business that we are getting is from the existing clients? If you are not able to share the percentage, is it possible to at least share, is there any increase compared to the last financial year? Thank you.
Sure. So medical business, it is not this quarter alone. I think over the last 8 quarters or so, we have been showing consistent high growth. So to that extent, it's not something new. Whether we will exceed 20% or not, I think that we will, when we reach 20%, we'll think about it. But at this point in time, as Nitin said, we put the target and we want to hit the target first, right? And of course, if there are opportunities to grow, we're not saying that we will not grow. We're not saying that, oh, no, we can't grow beyond 20%, right? So to that extent, we will continue to accelerate our focus on medical. We have made a lot of investments in that area. And I think we have built very, very strong capabilities that is relevant to our customer base. And I think we have a pretty good team, executing there, right? From your second question regarding new business, I think, we, as I said in the beginning of the call, we have been focused on deeper account mining and staying relevant to, our key customers, right? So to that extent, I think almost, 98% of our revenues come from our existing customers, even in the quarter gone by, right? And new customers only account for a very small fraction, of our revenue. Of course, over a period of time, the new customers also grow and then, become significant. But in the quarter in which we get into a new customer, it's typically it's about 1%, 1.5% or so would be new customers.
Jairam, just to add.
Thank you very much.
Yeah, just to add a little more color, the point is that given the nature of the business that we are in, which is R&D and product development, typically customers don't start off with a big bang, right? Because you're not going after renewal contracts and so on. So traditionally, it would be small projects that you learn and the customer also learns and gauges you by, and you would build and expand on top of that. So that also kind of explains the ratio.
Okay, thank you very much both for giving the background. Thank you.
Thank you.
Thank you. The next question is from the line of Amit Thawani, an individual investor. Please go ahead.
Hi Nitin, hi Manoj. Good to speak to you again. Just one simple basic question. The annual report mentioned about 3 more industries. One was the semiconductor, second one was the telecom, and the consumer electronics. I was just because in our presentation we don't include that, so I'm just wondering in which segment would these 3 come in?
Right. Yeah. So Amit, hi, this is Nitin here. Maybe I'll take that. If you look at semiconductor, because they form the foundation for electronics in every sector that you would work in. So to that extent, we do have engagements even today with semiconductor companies, but addressing certain key markets. And what is in the public domain, for example, is Renesas, right? Where we have been working with them on automotive electronics, and we've also announced a next generation EV Innovation Center, which builds on top of silicon from Renesas and then brings in software that we develop. There are similar relationships when it comes to 5G and telecom. There are similar relationships when it comes to healthcare. So that is the semiconductor piece. Telecom is an integral part of media and communications. So when you look at media and communications, that's what we call the vertical. Telecom is that communications piece, right? We do not say telecom only for the reason that nowadays telecom players are also media players. They offer triple play, quad play, and so on. So that's why we call the vertical media and communications. As far as consumer electronics is concerned, it partly reflects in media and communications because there is some amount of consumer electronics that's involved in media, right? Because when you work on set-top boxes, when you work on gateways, fundamentally we're working on consumer products. Part of it gets reflected in design.
Got it. That's it. I have no other questions. Thank you.
Thank you. The next question is from the line of Vimal Goel from Alchemy Capital. Please go ahead.
ये साल का नंबर 128 के बदले तुम्हारा ज़्यादा हो
So your line is in talk. Please proceed with your question.
But we won't.
As there is no response from the current participant, we move to the next question from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi, Raghavan, thanks for the opportunity. So in our earlier answer, we said that we plan to add around 3,000 plus kind of a fresher and 1,500 lateral. So that gives, which is almost forming around 40 to 50% of existing headcount. So just this kind of a new hiring, give what kind of a say short to medium term seems to be very bullish. Is that fair understanding?
Sir, you have to also take into account attrition, right? So there will be attrition also that we need to plan for, right? And then, of course, this is the target that we have, 3,000 or 3,500, freshers. And in reality, we may end up anywhere between 2,500 to 3,000 or whatever. It depends on how many of them really actually join, right? So while we would target, it's not that 100% of the people would join us also, right?
Okay.
So I think I think we should be around 3,000 people is what we target from freshers and from laterals, as I said, right? Depending on the demand and how attrition happens and so on, we will add anywhere between 1,000 1,500 people.
And this kind of addition, do we expect, offshore to go little up in next 4 or 5 quarters?
It's a good percentage for offshore. It could marginally go up, but I think it won't be significant.
Okay. And last question on this margin side. Despite we are not adding much revenue from a IP business, but does it really help us to improve our margin where we can deploy same into the client service business?
Yeah, we have not yet reached that stage. Right now, our IP, the products that we have, is primarily like helping us get a foot in the door and opening new accounts, new customers, and so on. At a later point in time, hopefully, when some of these are mature products and we get repeat orders and so on, what you say would happen.
Okay. And one more question.
Mr. Seth, sorry to interrupt, but for any follow-up, may we request you to rejoin the queue, please. The next question is from the line of Khandelwal, an individual investor. Please go ahead.
Hi, good afternoon. I just want to understand, right now our employee cost is around 50.38%. So what is the trajectory going in future, the trend? Is it likely to increase or decrease? What is your opinion on that?
Yeah, I think maybe that calculation may not be accurate, but I think that trend, employee cost is directly proportionate to our revenue. But I think we have been working on other, products and IP related and non-linear kind of the revenue. So likely it will not exceed the current percentage. Of course, there would be, intervention in terms of the wage hikes and all those things as we, go along, and there could be other things, but it's going to be in the similar range.
Okay, thank you.
Thank you. The next question is from the line of Mayur Matiani from Mahesh Kumar and Company. Please go ahead.
Thanks for the opportunity and congratulations to the management on excellent set of numbers. I have 2 questions. One related to our revenues from Asia apart from India. So it has been declining as a percentage of revenues. So is it by choice that we are focusing on other regions and that is why our revenues are lower, because Asia being a big market for automotive and communication. So what would be your take on that? And my second question would be on the initial response we have got on our new healthcare
platform. Okay. Yeah. So coming to revenues from Asia, yes, it has been declining. I think especially revenues from China has come down because China has been hit by COVID really badly. People are not being able to travel to China. There is no, even within China there are a lot of restrictions and so on. And similarly, I think both revenues from Korea and Japan also have come down. I think all these countries, the macroeconomic situation is not that good, and customer spend and customer, that confidence is also down there in that particular market. So I think naturally we don't see any large opportunities or big deals that are coming from that part of the geography. So yes, revenues are down, but at the same time, for us, from our perspective, the other major markets, Europe and US and India, has been growing very, very rapidly. So from our management focus also, we have been focused to really grow, the other geographies. But at some point in time, definitely China and Japan and Korea would also come up, and then hopefully in the near future we will see growth there.
And Mr. Matiani, just taking up the second question on the healthcare platform. This is Nitin here. I just wanted to clarify that we've kind of announced and launched that just at the end of March, right? So it's just been about 3 months since we've gone actively to market with it. You have to appreciate the fact that a digital platform like that is a fairly big and strategic decision for customers. So in some sense, it does take time to make sure that customers see it, appreciate it, understand it, and then are able to move down the path of assessment and selection. But I think the big side effect for us is the fact that even as we go into greenfield opportunities where a particular target customer does not have a platform and wants to adopt ours, We're also already starting to see the benefits of brownfield, where they have platforms. They are not necessarily going to switch with ours, but they are seeing that we're bringing all the relevant design and digital capabilities that are necessary for such platforms. The elements of customer engagement, patient engagement, views that you provide for doctors, healthcare providers, patients. These are digital and design skills that are both compliant to industry standards, compliant to healthcare regulations, and deliver the right experience. So we're already winning projects in terms of services that address digital healthcare platforms for customers, but our own wins are yet to come. But we have no doubt we will win some of those, but I think the benefit will be both in terms of services that are coming off the platform demonstration and services that are and revenues that are coming from platform licensing and sale too.
Thank you. Ladies and gentlemen, we take the last question for the day from the line of Karan Danti from Jeta Global. Please go ahead.
Yeah, hi, management team. Many congrats on the great set of results. So I wanted to just dig in a bit, a little more into just firstly the macro. Many software companies in the U.S. have started to see pressure, particularly from Europe. And if you follow the hardware supply chain within, I guess the server complex, you're starting to see some, I would say, some signs that server deployment is slowing. So it's very clear, and I think Morgan Stanley said this on the earnings call yesterday, that there is a prioritization happening where companies are saying, there's certain projects that are prioritized and certain projects that are not. Now, I think we've done really well to orient ourselves, across what I would call mission-critical innovation type projects. So I don't think we've seen any, if at all, impact from this. And there's a good argument as to why that should continue to be the case. But let's take a scenario where, there is a recession in some parts of the world, and the job market does get weaker in other parts of the world. What percentage of your project work would you decide is, would you say is discretionary for the customer, i.e., they would do it if they could, but if they have to put it off, they will, because the trade-off of being innovative versus saving money, just the math doesn't work at some point. So it would be helpful if you could just frame that for me, and then I have one follow-up.
Yeah, maybe I'll take a first stab at that, Karan, because it's a complex question, and obviously we're dealing with possibilities here rather than something that's concrete. The way I see it is, right, I think you're right in the sense that over the period of years, consciously from our side, and equally going through COVID, what has happened is a lot of the budget rationalization in favor of what is strategic, what is important has already been done. So in that sense, I think COVID was a bigger recession than anybody else, right, or anything else, because it really, truly squeezed decisions on what is important, what is strategic, what should stay, what should go from many companies. So to that extent, I think to a large extent, the budgets that we're dealing with now and the kind of projects we're working on now are, like you said, mission critical. If I were to then extrapolate to say now there is further pressure and customers still need to kind of think of what would they cut down on, I would still say that we stand a pretty good chance. And I'll just justify why that is so. Because if you think about what are their options is to do it in-house. The first option is not to do it at all, in which case there's no debate. Nobody wins. But if their option is to say we have to do something but have to do it at the lowest cost possible, I think we become the most attractive option on the table. Why? Because we are predominantly offshore. We are operating on very, very competitive rates. We deliver ownership and assurance of the objectives that the customer has or the outcomes that the customer has. So in many ways, I think we are a better option for continue, even if it is a reduced continue, than a stop. So all I would say is that unless the decision is a stop, and therefore they're going to fire their own employees or they're going to cut out all the work that they're giving out, we would most likely still be the second last or the last on that option list. I can only envisage our future that way.
Yeah, and the only other thing I would say is that, look, these events happen, right? And we have seen it happen when COVID hit us in the first quarter of 2020. We did have a situation where customers did pull the plug and a lot of projects were scrapped and so on. But the good thing about Tata ELXSI is that we have seen this before, and we quickly reoriented ourselves, and we were able to come out of that situation within the quarter, right? Within a quarter, by the next quarter, we were up and running. So I think there is a lot of confidence in the team that in the case of a deep recession and deep budget cuts and so on, we will figure out alternate ways to deliver, to come back and continue our growth, right? So, and we have proven that during the COVID time also. So there is a confidence in the team.
Great, thank you. And then my follow-up was, the transport business. Just as you look forward, it seems like there's a growing chorus that the semiconductor shortages are essentially moving in the right direction as slack in PC and consumer shifted and reallocated towards autos. Did that benefit you in any way? If production rebounds, I guess the budgets don't change. People would have to innovate either way, but I'm just curious whether that has a kind of a second derivative impact.
So if the semiconductor prices come down, then all our customers will be happy. And as you know, right now, if you go to any auto dealer, or you don't have too many options. There is a huge waiting list for most models, right? So what happens is when all this pressure automatically comes down, OEMs are able to sell more, which means automatically they generate a lot more money in the bank, and that will funnel a lot more new R&D projects. So definitely we will benefit.
Thank you. Ladies and gentlemen, due to paucity of time, and that was the last question, I now hand the conference over to the management for their closing comments. Over to you, sir.
Thank you all the investors who attended today's call. It was a satisfying quarter for us, and we hope to continue this trajectory, and look forward to talking to you again after our Q2 results. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Tata ELXSI Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.